Hello guys, welcome to another Value video. Today taking an in-depth look at Procter Gamble Company, an American multinational consumer goods corporation headquartered in Cincinnati, Ohio, and founded in 1837 by William Procter and James Gamble. It specializes in a wide range of personal health, consumer health, personal care, and hygiene products. These products are organized into several segments, including the beauty, the grooming, health care, fabric and home care, and baby, feminine, and family care. As of the 22nd of January 2025, their stock price is $162, a market cap of 379 billion. Their forward PE is for 23.7 and their median 10-year PE is 24.7. The price to cash flow is 19.17 and their forward dividend yield is 2.5. Their revenue has grown by 18.4%. Their net income has grown by 14.2%. Their earnings per share have grown by 21.4%. Their common shares outstanding have decreased by 5.9%. And their liquidity and solvency also looks okay. Their interest coverage ratio is 22.5, so very good coverage of their interest payments. Their quick ratio is 0.55, but that's to be expected since they are a high inventory business. Their long-term debt equity ratio is 0.5 and their debt equity ratio is 0.69, both showing a moderate debt load. The cash from operations has increased by 14%. Cash from investing has decreased from a positive 3 billion to negative 3.5 billion. The cash from financing has increased by 77%. So they're doing a lot of buybacks. The capex has increased by 8.1%, and their free cash flow has increased by 15.3%, which is pretty good. Their financial ratios also look pretty good. So the return on equity is 27%, the return on investments is 24.5%, the return on assets is 11.5%, and the return on invested capital is 16.7%. Now for the stock valuation, I did a DCF valuation, multiple valuation, and analyst expectations, from which I calculated the intrinsic value. Of course, I think that as I mentioned in my DCF valuation, I used a pretty high revenue growth rate of 7%. I don't ever think they'll do that. So take this valuation with a huge grain of salt. Now for their intrinsic value, it's 157.62. With a 15% margin of safety, you get an acceptable buy price of $133.98. So at the current levels, the stock is not a buy, but it's trading near fair value. Now to conclude, as I've mentioned, I used a pretty um, optimistic revenue growth rate for my DCF. And so I believe that their real intrinsic value is a bit lower. And so their acceptable buy price is as well a bit lower, somewhere in the 125 to 130 range. But and so at today's price, I don't think they're a buy. I don't think they're a sell either. They're not really expensive. They're probably a hold. Yeah, they're a okay company. They have good growth. They have stable growth, but that's just it. It's a boring company with stable growth. This is one of the companies which would be great for a value play if their stock dropped, since a lot of value plays these days are very risky. Now, sure, there are some more stable ones, but there are a lot of value plays which are very subjective in the sense that the company it's not as stable as PNG. So the revenue, for example, is cyclical or whatever. So most of the value plays these days are much harder to evaluate. PNG, if their price halved, then they would be an obvious buy. It would be one of the easiest buys I could ever imagine. So this is definitely an interesting company to take a look at. For example, if the price drops, so I suggest you put a price alert on it. And if you own the stock, I think you should hold it. I don't think you should buy more, to be honest. It's basically only a hold. You should put your money in other stocks. Even in this overpriced market, there are still opportunities. And as I've said many times before, people that think value investing is that haven't tried real value investing, and they should read The Intelligent Investor and other books and look at real life examples and investments. To be honest, it takes a lot of practice to get value investing in the modern sense. It's much more complicated. It's not one thing, and it is very mixed between numbers and personal understanding of how companies work. So to be honest, it's very hard. But value investing is still worth it, and I believe that PNG is definitely one of the classic value plays, of course, if their price drops. For now, they're just a hold. Now, move on. Let's move on to our affiliate ticker data. If you have a portfolio in Excel, if you want to build a DCF, if you want to do anything with financial data, then they are the app for you, the tool for you. They offer real-time financial data in Excel, so they have an API, and also they offer a ton of templates. So if you want to do a personal portfolio, to have one in Excel, if you want to do a DCF, a DDM, and so on and so forth, they are the tool for you. They're also pretty cheap. You can check it out in the description below. Also, I will leave a comment. I will pin it with the link so you can check it out later. Also, check out my investing blog featuring in-depth analysis from the link in the description below. You'll love it. If you're an value investor, I'm telling you, you will just love it. It's so great. Yeah, I hope I can see you in the next video. Bye.